Okay, fam, welcome back. So today we're going to be going over the buy, sells, and dividends for March 9th through the 15th. So with that being said, let's get it. Okay, so we're not going to cover grayscale today. We'll do that tomorrow. That's definitely going to be tomorrow's video. So we're just going to cover the income that was made and the buys and positions and all that stuff for the week. We'll get into that later. So starting here with M1 Finance, you can see, and again, this is from the 9th into the 15th. So again, we have not put a lot of money into M1 Finance at this time. Doesn't mean we're not going to. We intend to. We're just not going to do it yet. So 3 cents here from 3M, 73 cents from Apple, and 45 cents from Horizon. That total comes out to $1.21. So again, it's not really much, but is what it is. In terms of the cryptocurrency positions, so again, just want to show you this so you guys know where the stands. We do still have our positions. We haven't bought any, haven't sold any, kind of just sit back waiting to see what the markets are going to do. We will let you guys know if and when we decide to buy more. So as of right now, it's pretty much still the same. So I'm going to go over here and cover the options real quick on TSLL before we get into the rest of it. So again, starting from the 9th, so I figured it was a better idea just to do this instead of reading off of the other computer. So we'll talk about it here from the actual transactions on TSLL. So on March 10th, we opened up this is a cash secured put for $43 in premiums. This is one contract, and the expiration was on the 14th. We did get assigned, no. Did we get assigned on this? No, we did not. Okay, so anyways. So we'll talk about the options first and then go over the shares. So we covered for $8. So we got a total of $35 in profit because, again, the price was, when you have a cash secured put on, the price moves up and past the strike price in the up direction, the contract very quickly loses value, which means that you can buy it back at a profit for less money, or I should say get to keep most of the premiums in that case, okay? And the opposite is true for a covered call. If you do a covered call and it goes past the strike price, like let's say it's $20 on your covered call, and the price at the time was 22, but then it goes all the way down to 18, 16, 15, something like that. The lower it goes below the strike price, then in that case on the covered call, the cheaper it becomes to buy back the contract for profit. So that's what you're looking at there. So we bought back for $8 or 8 cents, basically 8 cents per share. Then opened another one immediately for $7.70 for the 21st. Sold that one for $55 in premiums. There was another one that we had. So I think it was this one right here, the 9.15 that we opened on the 7th for closing on the 14th. We got assigned on this one. You can see it right here, the put assignment. So basically we got assigned 100 shares at $9.50, which is fine. That's exactly what we wanted. Don't have any issues with that. So we also, because we put on a cash secured put and we weren't entirely sure if the market was just going to V-shaped recovery and we were going to miss out on the opportunity to get assigned the shares. So we said, screw it. We're going to do a double hedge here. What we're going to do is keep the cash secured put on, but then buy spot shares on the market in case the price rips up. We can still catch these at relatively cheap prices before they go too high up. And then we also don't get assigned on the shares. So we decided to keep both on, collect the premiums, and then just buy the spot shares straight off the market, which is fine by us because we're still going to get paid on the covered calls on the opposite end when the price goes up anyways. So you can see here 13.41 shares on the 11th. Really cheap prices, only about $7.50 a share, 87 shares at $7.61 on the 11th. And then we've just kind of been nibbling little by little because we're not sure exactly what direction the market's going to go next. So 20 shares here at $8.63 on the 13th, 20 at $8.69 on the 14th. So you can see that we basically kind of our worry that it was going to go up pretty much came true. It didn't go up to like insane heights quickly. But again, these cash secured puts are for a 5-day period. So it takes some time for it to play out. So that's pretty much everything that's going on with TSLL. So in terms of the premiums here, the total was $90, which again is not a lot for, a week. But again, we have a very large amount of capital here, just kind of sitting on the sidelines, slowly pushing that money into the markets when it makes sense to do so. So we're not trying to ape in all at once just to get dumped on, right? got to be somewhat strategic here. So again, on Webull, no dividends as of this week. The OARC's probably going to come in next week. Click over here to, there we go. Okay, so we still have the shares, and again, our share cost basis is pretty high here, unfortunately. So we don't intend to buy anymore. We're basically just waiting for this thing to go back up. But yeah, that's pretty much what it looks like right now. So, and again, the market has been getting absolutely thrashed. I mean, we've been at these prices before, so to see it go from the current prices maybe all the way back up to $11 wouldn't really shock me at all. Probably could even go higher if we start to get QE. So that's pretty much that. Now, in terms of the dividends that we got paid, so the dividends that we got paid was $34.93 from YMAG, $27.30 from YMAX, 5 cents from XDTE, 7 cents from RDTE, and $26.21 from QDTE. All right, so we're going to cover that right now. So we'll start with YMAX. Since it's at the top of the list, made a nice little recovery there. Not bad, not bad. So 27.30 here, you can see. There's a little article about Jim Cramer over there. I was going to say some smart remark, but I think I'm just not going to say anything at this point. So I'm sure you guys have heard of the inverse Cramer effect, right? Let me know down in the comments below if that's the case, if you've heard of that. So anyways, YMAG, nice little recovery here. $34.93 from YMAG. XDTE, RDT, we're not going to go over that. I mean, it's you guys obviously that are in the Round Hill funds. You know when these pay out, what the exact amount is, all that stuff. Obviously, we've had the shares here. You've seen it for a while, so 0.19 shares. And then where's the other one? 0.24 shares here. We've been mainly focused on buying GPIC because, again, we really want to buy these kind of higher quality, a little bit more expensive, better total return assets at cheap prices when they're on the dip. And as you guys know, the markets have been getting absolutely destroyed lately. So what I will show you guys is, and it, like I said, it's such a small amount of money. I don't think it's really relevant at this point, but we did get those dividends. When we start really accumulating these, we'll let you guys know and show you all that stuff. So 26.21 here from QDTE. Again, those are weekly. So YMAX, YMAG, and the DTEs are all weekly. Okay, so trying to get this thing to scroll down real quick. So we'll take a look at GPIC. You guys can see all the different buys that we've gotten. So again, we're barely down on this. We're only down $23 or 1.25%. In one day, this thing managed to recover roughly about 2.3%. So just goes to show you the power of a green day and buying these very high quality ETFs on the dip. So roughly about 41 shares as of right now. The goal is to eventually get to at least 125. So it pays $50 a month. We're about a third of the way there as of right now. So just looking at it, you can see we bought extremely, extremely cheap here. So 2.23 shares on the 10th, 4.5 on the 11th, 4.46 on the 12th, 4.49 essentially on the 13th, and 4.46 on the 14th. Now going back here over GPIC. So I want to once again go over the max time frame and show you guys this. The price performance overall over time has been very good since inception. It was started out at 38, 39, somewhere there. Went all the way up to 50, and then we got this insane pullback. So obviously this is a pretty rare opportunity right in the middle of bearish seasonality, right? So again, we got a very similar pullback right around the same time last year in March. This time it started actually a little bit earlier in February. So pretty sizable pullback there. Would have been a good time to buy the dip before it eventually ripped. And then again, a larger one in July and August, and then it ripped. Right. I think you kind of get the point here. So pays about 41 cents a share. It's not too bad. Okay, so I'm going to show you guys the position on TSLL now if I have not. So we'll talk about that. Right now, we are still going. I wasn't actually going to tell you guys this because, again, we kind of don't really want to telegraph our moves before we make them. But since we know for sure we're going to do this, we're actually just going to go ahead and tell you guys right now. So the goal as of right now is to get to at least 1,000 shares. Okay, so we have 940 at an average cost of $13.28. And again, that's a pretty low price. I mean, that's pretty good as far as I'm concerned. So again, this thing has just gotten absolutely whacked. If it goes, I think the all-time high for TSLL was $41. So again, I'm just going to tell you guys this at some point in the future. When exactly, I don't know, but at some point in the future, I think Tesla will be $1,000 a share post stock split. Okay. And there is a real possibility this fund right here could be worth $80 to $100 a share. Sounds crazy right now, I know, but again, that's what I think. So, anyways, yeah, you guys can see the total share count and all that stuff. So we're gonna buy $20 or 20 shares per day for the next 3 trading days until we get to 1,000. We'll figure out what to do with options on Monday. Let you guys know. And in terms of like looking at the options here, you can see the covered calls are just going a week out are not that great. So pretty much what we intend to do is wait till the price gets above our cost basis, and then maybe we'll take a look at doing some covered calls. It depends on what the price is at the time. Cash secured puts as of right now are paying somewhat decent, $72 a month roughly. Again, these change every week. But $72 a month roughly for one contract at $7.70 a share. Again, I don't know that it's actually going to go that low. I think I can't say with certainty, but it seems pretty highly likely that the bottom for Tesla and TSLL is in. But again, I don't want to make that call because I could be wrong here. But it looks very likely that's the case. All right, so that's that. Now we're going to take a look at QBTS. So this thing just had a whopper, absolutely ridiculous move. Okay, this was crazy. Yesterday on Friday, we took profit on it, and then we jumped into QUBT, which I'll show you in a minute. That's another quantum stock. So huge move here, 50% gain. Absolutely nuts. And again, apparently it's jumping ahead of the NVIDIA conference that's coming, presumably this upcoming week. So had some mixed earnings, but again, for whatever reason, it decided to pop. And we took a nice juicy profit. So our average was $6.99 before the sell, and then the sell at $8.96, which came out to a total of $324.73. And again, we had 1,150 in this trade, so rounded it up to about 1,500. And I'm going to show you guys the next trade here. And again, when I give you guys the signals, the golden cross signals for these particular trades, that's it. That's the time to get in. Again, I cannot convince you to do that. I mean, investing or trading anything is risky. I understand that, but when we post that on Xer here, that's pretty much the time to get in. So QUBT here, you can see also a massive move on Friday. Probably going to keep going higher on Monday, I would guess. So our average is 672. We're already up 8.63%. We could have took profit yesterday, but yeah, we didn't really want to do that. So anyways, 219.49 shares here for a total of about 1,500. Wouldn't shock me if this thing probably went past $10. I would not be shocked at all. So let's see what else we got here. So I'm trying to think, what was this? Oh, this is the Robinhood dividends. That's right. So we got the Robinhood dividends. This is the profit here, and then we have the M1 Finance and the options premium. So let's go ahead and add that up. So 88.56 plus 324.73 plus 121 plus 90. So again, not a huge week, but again, we don't really get a lot of dividends in the middle of the month. We have to find some positions we can buy that do that. But as of right now, most of the dividends that we get, which is probably most of them on the market, usually pay out somewhere between like the last week of the month to the first week of the month. So anyways, not too shabby, $504.05. So the next position, and again, we weren't going to do this because we don't really want to telegraph our moves, but since we know with certainty this is probably what we're going to do on Monday, then we're just going to go ahead and tell you now. So what we're going to do is buy triple QT on Monday. Okay, that is the ETF that we're going to buy in terms of passive income. So we're going to stop GPIC for now, and then we're going to buy triple QT. Why? Well, it's quite simple. we have bullish divergence, so RSI going up, MACD going up, price going down. We have a bullish break of the trend line here, a double bottom, and a golden cross. It all looks very good, okay? On the lower time frame, on the higher time frames, it looks absolutely disgusting. So the point I want to make here is it does appear that we are getting a reversal as of right now. Whether this leads to a bear market rally, i.e. a dead cat bounce, or some kind of major rally to new all-time highs, that remains to be seen. The level that I would like to see get broken and retest is right here at 20,690 or about 20,700. That is a major swing level. That is structure. It came up to that level, got rejected, and then boom, sold off a cliff. If we can get above this and close above it with maybe something like this, then I'd say we're good. Okay. In this case, it makes sense to buy a triple QT now before the price rallies, right? However, I'm going to come out and throw a hedge in here and say if we get something like this, where it comes up, retests, maybe retests again, and then boom, starts selling off to the downside, and it turns out this was just a small bear market rally. If we see lower lows on the price of the NASDAQ, we're going to buy more GPIC. Okay, we're going to go back to buying GPIC. That's what we're going to do. Okay, because again, I want to reiterate here that triple QT and SPYT, these ETFs are designed to stick around $20 a share when the markets are up. That's pretty much what they're designed to do. You can see we have SPYT. I mean, this thing had a massive rally on Friday, so even though it looks quite disgusting, the price, it went up 63 cents a share in one day. Okay, and this ETF is designed over time, obviously not recently, but over time, designed to kind of sit around that $20 area. Same thing with triple QT. And it pays about 33 cents a month. So if we can get the shares on the cheap, then obviously it makes sense that we can get more income for less money. The same is true for GPIC, but to get our position on GPIC and GPICs is going to take a little bit more time. It's not something we'll be able to do very quickly within a month or two. And the opportunities also have to present themselves simultaneously. So yeah, so triple QT, that's going to be the one that we're going to get on Monday. And again, we're just going to buy the same amount we bought on GPIC day after day after day until eventually we get the share count we want, which I don't know exactly what that is. I think it's somewhere between 150 to 200 shares. So yeah, so anyways, that pretty much wraps up the video for today. Hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.